journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we had a couple questions about two stocks, ETFs, that I wanted to go over before we get to the trades we're looking at. This is a Russell ETF. We use the Russell futures, but as you can see here, we have just matched these highs here. 1, 2, 3, 4 times. We've been at the 50% level here over the last week. So if we close above that, I don't think it means very much. But remember, on that pullback that we had after the 24th, we came down and we just missed the 382, so it's still looking pretty bullish. If we get above here, you have to say it's going to be a little bullish. If we get below here, you'd think it'd be a little bit bearish. Now, the next one that we had was the iShares, which means this is the S&P mid-cap. I don't know how that relates to any of this, but I'll do the chart. Fact is, I'll do it the easy way. Just put these in. You can see here we've had the big expansion, 50% retracement, and what we've done here since December, this was on the 25th when it topped. We've been up to the 61% retracement, and we're trading almost there right now. There was the big sell-off that we had the other day on the 30th after that big move down on the 20th. So start getting here, it would look bullish. So that's what I'm thinking there, so I hope that helps. And now we're going to take a look at the wheat. Yesterday we put a wheat on at 568, and unfortunately a lot of people didn't get that because we were trying to do it at 571. It had a good break. It came all the way down to the 382. You'll see this morning there was a 382. Now, folks, if you're only risking $350 on something and you made $750, you ought to book some of it. Now, if you haven't done that, I would just, since you still got about a $400 profit in here, what I would do, because I still think this is valid, I'd put my stop here at 566 if you didn't cover. But remember, when you're making 2 times or 3 times what you're risking, you've got to really get on and take that profit, because we're looking at shorter term things. We're not going to look at something on Wednesday and say it's going to be somewhere 3 months from now. That's a little too hard to grasp for us. Okay, now here's another one that we had. Remember, we were talking about the gold yesterday. Let's get that daily gold chart up here. And if you'll remember, we were talking about this big number up here at 2862. Do you remember that? That 1.618 expansion of the whole thing, and the high today was 2862.4. That's pretty close if you want to count it. And now it's backed off just a little bit. All that was doing, folks, was making that big butterfly pattern with that huge ABCD that we've been watching. And, sometimes these numbers work and, sometimes they don't. But when they do, they're fun. And when they don't, they're not so fun. That's pretty much it. All right. Now we got a couple others that are in vogue, and we got to take care of these because Stan's going to be our guest today. Here's the S&P. Now this is on an hourly chart, so we're up in the stratosphere. Okay. Now there's the 27th. Remember I said there was going to be a big break. We dropped 160 handles, and look at this. We're almost back to the highs. There was the 382. Remember on the 28th in the middle of the night right there, and boom, and away she went. And the high today was supposed to be 61.48, and the high today so far has been 61.47.75. And whether that means much or not, I don't know, but this is what we're watching here with the S&P. Now, if we switch over and take a look at the NASDAQ, we're right near the highs of the day in the NASDAQ, I believe. And we're seeing pretty much the same thing as we look at these things unfold. And there is the number in the NASDAQ comes in at 21968. And the high today in the NASDAQ, It was supposed to be 21968, and it's only 21966 so far. So maybe we go up and finish this in just a little bit. So that's very, very close. That's the same type of pattern we're looking in the S&P. Okay, now we have an outlier event in the Dow Jones, folks. Remember yesterday during the radio show, I thought we had a really good chance for this market to get to 45371. That's the ABCD off of this whole thing right here. That's what that is. Now this in itself right here is an outlier event. The number of times the Dow Jones goes up 14 days in a row without a correction is really rare. You can see here's another one, another type of run right here. Let's just see take a second here and see how many days it took on this run. See, this one was, I think, 16 days. Let's get this out here so we can see it. Oh, that was 18 days. Anything past 12 is really an outlier event. So if it went as far as 12 or 18, it would take you all the way out to the 10th of February. If it's normal, like it is normally, it should be topping right in here. All we've done is taken out the highs. And look at this. Instead of going up, look how much we've given back today in that. I mean, this has been a pretty big drop. In fact, there is your first really good retracement right now, just at the 50% level. So I don't know. There was one here. I saw this, but I couldn't count that because it was only 2 days. There, I saw this last night, but there's your big run up. Remember we had the run, and then there was something about IBM or something, I forget. That measured to 45218. And the high was 45227. So that lined up pretty nicely, but I don't know if it's going to be the top or not. All I know is an outlier event, and I'm bearish, and I know I probably shouldn't be, but by golly, this is what I'm looking at and sticking to it the best I can, I guess. Now, let's move on here and take a quick look. We've been bearish this crude oil, folks, and it just doesn't have any friends. Yesterday, we made the 382. Today, we came down early this morning. You see we've made new lows. Then we rallied up. Let's see where we rallied to. I've been too many things with so many things. I haven't been able to do that. We rallied up to the 50% level. And look, we've dropped another 70 cents. This market's looking very, very bearish, folks. It might be related to tariff. It might be related to demand, but I'm not sure which. Okay, let's see make sure. We got to talk about the currencies because we've had a pretty big move here in the euro over here overnight. There's where we were. Remember, we were looking for it to get down to the level. Now, we made the 382 here, and then we came down. Okay, now this was a 50% retracement yesterday. Okay, so this is where we were having good action, which is good. It's all related to 107 in the U.S. dollar. Okay, so you've not made an ABCD to the downside. All you're doing is rallying back up. So what you want to do, and this is a great thing to trade if you're learning to trade. Oh, I have an announcement on that too. They're coming out with mini contracts, micro contracts for all of the grains: bean oil, soybeans, meal, wheat, the whole shebang. And so that'll be coming on February the 24th. So we made a 382 retracement, okay, and it was probably exactly 61% retracement of that one right there on a short-term basis. So there's where we're going to take a break. Stay tuned. We got the Harley Man coming up. Get your rotten eggs and vegetables ready, folks. They've been throwing at me for 3 days. It's time for Stan to take his. We're ready for you, boys and girls. Stick.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry has been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, we're back, and we have Stan Harley in the house today. Stan, how are you doing, my friend?
Good morning, Larry. Doing just awesome.
Okay, questions that people have been asking me. I thought I'd have you on the air. The stuff that we used to work on back when we didn't have all this computer stuff with Joe Granville and Richard Russell, Ed Hart. What was the guy's name? Trading the market. It was the real quiet guy he was a lead guy at FNN. He was on every day at 1 o'clock, reversing the market. I mean, I had a hedge fund. I helped him set up a hedge fund for the S&P, and I can't remember. He and his son worked it. Let's forget about that. The question I want to ask you is, Gene Morgan, Trading the Market. Yes. Thank you very much. Yes, he put Byron and I put a S&P hedge fund together for him that we started trading. We started doing pretty good, and then they took it over, which was just fine with us because he was a rather difficult person to work with. But I met Joe Granville, I met Richard Russell and stuff. But Richard Russell was, he was really the kingpin of the Dow theory because, he had 150 years of data. Going back in the stock market and showing, when the transportations and the Dow were going together. They called it non-confirmation, as I call. If the utilities, the Dow Jones, and the S&P were but there was no S&P, and the Dow Jones were all going together. But I talk about that stuff. I look at the transportation chart, and it looks terrible. And how do you get stocks to go up? And when I asked someone in the woke era, they said it doesn't mean anymore because it's all computerized, and with all the ETFs, that stuff doesn't matter. I still believe that it matters, but what's your feeling on that, Stan?
Yeah, good point, Larry. I totally agree. But rather than just limiting the Dow theory to the industrials and the transports, I expand that a bit. I find it to be very helpful to look at what I call the big 5 major indices. And for me, the big 5 are the Dow Jones Industrials, and yes, the Dow Jones Transports, but in addition, the S&P 500, the NASDAQ Composite, the New York Composite, and its companion Advanced Decline line. So those 5 indices plus the AD line. And I look at the interplay among all of them and look for either confirmations or non-confirmations. And generally, in a healthy bull market, as the market goes up, we tend to see all 5 of those components make new highs. But then as the advance matures and starts nearing a top, we typically see 1 or more of those start falling off the new high list. And so by the time you get to the final cycle top, you may have maybe 1 or 2 components comprising the big 5 in the new high club. Classic example, 2015, which is, I think, somewhat similar to the present day. Recall back in 2015, on May the 19th and the 20th, we had all of the major indices making new highs on the 19th. On the 20th, the Dow had fallen off the list and the New York Composite. And then 2 months later, on July 16th, the NASDAQ Composite was a solo performer going to a new all-time high. So essentially from 2 months, from May 19th to July 16th, within that 2-month period, you had each of those 5 components making new highs. And then when you got to the final cycle top, which was in July, you had the NASDAQ as a solo performer going to a new all-time high. Okay, let's look at the present.
For some reason, we're not getting your live screen. Could you try it again for us?
Oh
They
my
want to
gosh.
see your handsome face. Yeah, that's what I said. Oh, I can see you perfectly. I don't know why they can't. Maybe I'm late on that.
On my monitor over here, I'm seeing myself talking. So
Yeah, me too. You're looking pretty good, actually. So this is good. Let's just keep going. I think that was an old message, probably. So let's just keep moving on, and we'll see what's happening.
Well, let me just take command here and show my screen. This is what I'm talking about. This is what we're seeing right now in the present, and that is we saw the transports top out in November, although they made an all-time high back in 2021. But for the case of illustration in the present cycle, transports made a high on November 25th. The New York Composite and the companion AD line made their high on November 29th. The Dow Industrials made their high on December the 4th. The NAS on December 16th. And on January 24th, we saw the S&P. Now, let's say we see early part of the next week, 1 or 2 of those components go to a new all-time high. It will be roughly analogous.
The Dow Jones,
Yeah, it will be roughly analogous, not the same, but analogous to 2015. 2015, there was about a 2-month window of time between the time all of them topped and the final index to top, which was the NAS comp. So basically from about May 19th to July 16th, that's about 2 months and change. Present time period, look at December 4th or November 29th to about early part of next week. That's about 2 months and change. And maybe we get just 1 or 2 components topping out early next week, and maybe that's it. That's one of many things that I'm looking at. And so while history never repeats itself, as we like to say in this business, it often rhymes.
It sure does. Stan, now the question, do you look at the Dow Jones transports in your analysis?
I do. They are, of course, lagging the benchmark indices, and they topped out, as I said, back on November the 25th. And here we are, last of January, 2 months later, and they have not gone to a higher high. Yeah, they're lagging pretty badly. And I think you nailed it when you said, yes, it does matter. Absolutely, it does. Yes.
Well, I think it matters. Other people don't, but you can't teach an old dog new tricks, especially when the dog's rather aging. I'm not aging at all. I actually feel pretty good for my age. Stan, one other question now that I wanted to ask you. You mentioned, we were talking earlier this morning, we talked about Richard Russell and Joe Granville and stuff. Folks Russell died at the age of 94 about 10 years ago, and he was the Dow theory. He was, anytime you went to one of these meetings, well, they had big meetings back in those days too, but not like they do today, but he was always the key speaker. He was always somebody up there with Milton Friedman or, what's the other guy's name that was slips my mind. It'll come back to me in a second. But he really did a lot of work, and his research was, really impeccable. He was a weird duck because he was very, very private, and he didn't have many friends, and he was hard to get along with. But I met him through Peter Leides, and of course Peter learned a lot from him. But he really ran the show. He and Joe Granville. Do you remember the days, Dan? I know you do. When Joe Granville will say something, the stock market would move 2 or 3%. Do you remember those days back in the 70s and 80s? Yeah.
I did.
Yeah.
I came from the Southern California.
Hey, Joe, we got to take a break. We come back. I have a Joe Granville story that's my favorite that sticks to me to this day. We'll be right back. Dan Harley, be right.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, Stan, I have to tell you a story about Joe Granville. I started Drexel in 76, and in 78 we had a directors meeting in Las Vegas at Caesar's Palace. And if you had a high production number, which Twentyman and I did, we were invited to go. Jim was doing something else, so he couldn't go, so I went. And it was, a really lavish. Lou Rawls and Liza Minnelli were the guests, and the lead speaker was none other than Joe Granville, and he started the show, and he had this showgirl come out with some type of cognac that was worth about $3,000, and he had this little monkey with a little glockenspiel, playing a little tune as he was walking across the thing, holding it over, and they opened the cognac, and he toasted to all the suckers who did not buy the Joe Granville stock market letter. And I'm sitting at a table with one of the directors at Lilly, or at Drexel, and he looked at me and he said, "Sell that MF short. That's his high tick." And 4 or 5 years later, when he was on the down move, and I was at the one of the money shows in the early '90s, I sat down with Joe and was telling that story. He said, that was my high tick. He said, I never got any bigger or better than that. He said, that was as high as I'd ever got. But when Bob said to that, I said, oh my God. He said, sell him. He said, that's his high tick. And anyway, that was my own story. But he was smart. Boy, when Granville talked, the market would move 1 or 2% just like that, but not so much anymore. Henry Kaufman was another one that used to move the markets.
I was fortunate. I was the president of the Market Analysts of Southern California for a number of years when I lived out in LA. And oh my gosh, I got to meet a lot of people personally. I would invite them to come speak to the group, and I had a close association with Channel 22, KWHY Television there in Los Angeles, which was pretty much the precursor to all the financial stations we see today. It was the original financial station in the country. Yeah, Joe Granville. I invited him out to Los Angeles. He lived in Kansas City. Yep. And so he flew out to LA, brought his wife. I picked him up at LAX. We went to lunch, and then I took him to the hotel where we had our meetings. He spoke for a good hour and a half. Larry, I'm telling you, that was one of maybe the most jam-packed meetings I have ever experienced when I was president.
He was a market mover. There's no question about it.
We had over 200 people in that room. It was wall-to-wall, standing room only in there. And he was a funny guy. Cantankerous, of course. He pioneered a lot of technical indicators on balance volume, for example. I remember him telling a story that he had given a presentation just recently to a gathering, to a group at a hotel outdoors. There was a swimming pool there, and he promised he could somehow move the markets, and just to prove his grandiose, he was going to walk across water. And he did. He walked across water. Of course, unbeknown to all the spectators, he had some little stepping stones placed right underneath the surface.
Oh yeah, he was a real showman, much like Larry Williams. Larry's a great magician and stuff. But Joe, I asked him. I said, "Did you ever front run any of your speeches and stuff like that? Like you thought the market was going to go up or down?" He said, "No." He said, "I never really did that." He said, "I just thought what I did was good enough for people to either take or to leave it." But he said, "I never really tried to make anything off that," which is, back in the old days, if you did that, you actually would have probably been, not arrested anymore. But anyway, he was a pretty nice guy, real straight shooter on everything. So it was fun to be with him and see all the stuff that was going on. But people don't know this, but towards the end of his life, he got involved with alcohol because there was a death in the family, and he got really bad, and then he got out of it, and everything turned to be pretty good. So he was a really good guy to be around. Really fun. We were lucky, Stan. We live in that era that it was just really something. We have one other question. The reason why I called you this morning is two people called the last couple of days and asked me, how does Stan handle being long or short during this time? I said, I don't know. I know he watches short-term things and stuff, but how do you handle being short? You just put a short on and stay with it, or how do you handle it?
There's a long answer associated with that. It depends on the type of vehicle one is using. whether
Okay,
it's
let's say the
stock,
S&P.
ETF, or a futures contract, whole host of things. And I trade them all. So depending on what I'm trading, I will employ different risk management strategies. If I'm short the futures and I'm in a position, or I'm long, either way, and a position goes against me, I have to employ a reasonable stop and have to get out, and then go back in at a later date when I think there's a better setup. This business isn't about perfection, and I've got to remind people of that. You and I, all of us in this business, do our very, very best. We analyze the markets. We come to a reasonable expectation about what we think is likely to happen. And if it happens, great. If it doesn't, then we need to go back and give the Ouija board a good shake. It doesn't mean the analysis is not sound. It could mean that a topping evolution or a bottoming evolution is expanding. Like I talked about a few minutes ago, a top doesn't mean everything turns on the dime. A topping evolution can span months. In 2015, it spanned about 2.5 months. In the present environment, I think there's probably something similar taking place. So one has to pick the right vehicle. One has to employ prudent risk management techniques, and one has to employ market timing skills. And it takes a blending of all three of those disciplines to be successful, I believe. Back to the topic we were talking about earlier, when you called me earlier and wanted to talk about some of the people that you and I have known. I made a very brief list. When I was president of the Market Analysts of Southern California, I had a number of people come out and speak to us. I know you knew some of these, but just going down the list, Richard Russell, Joe Granville, Sherman Tom McClellan, Robert Miner, Walter Brezert, of course, Larry Williams, Tom DeMark, the great Larry Pesavento, and many others.
Peter Elides, don't forget Peter. He's one of the best. Yeah.
All of those people I had the great fortune to meet personally, and they came out and shared their analytical techniques and some of the processes that they employed, and I learned a lot from those masters. Absolutely.
Well, listen, I really appreciate you coming on here today to join us. So good luck. I just saw since we've been on this air these last 15, 20 minutes, the S&P's dropped 40 handles, and I don't know what that means. And gold's dropped another $20, so something must be going on today. But what it is, I don't know. But thanks for joining us today, my friend. You're a real gentleman to be around, and we certainly like having you come on, and we'll have you on again soon. Okay?
Terrific. Look forward to it. Thank you.
Thank you, Stan. Stan Harley, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets. with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this is the gold market. We were talking about that earlier, about that number up there at 2862. We just come down and made this little 3 drive to a bottom pattern right here. I'm doing this without a microphone, folks, because my mic is not working. And so I hope the sound is good. Al will let me know that if it isn't, but that was definitely this. Now, I was watching, we had a first 382 here this morning right here at 2858. Okay, I said, wait for that top to come in if you want. There was your first 382 retracement, and then we've come down. Since that time, I've been watching it along with the S&P, and one of the things I've been watching is to see the first time we get a 382. We had another 382 pattern right up here at 45, and it dropped all the way down to 31. So the next thing we want to be watching is to see if we get another 382 on the day, because this market is still bullish. We could get all the way up here to 43, folks, and it'd still be a bear market, at least for a short-term period today. So all I'm going to do now is I'm going to be ready to place an order in here and see what's happening. Now, we were on the air. I thought this was 3 drive, but we were chatting with Stan. That was more important than anything else. We're going below here, folks. This could be the major top here. Silver is already telling us that, because silver has come down a great deal. You can see how far it's dropped from today. And I will just draw this in this morning. There's the first big rally in silver. It went a little, well, there's your first 382 was right in here. Well, it went to the 618. This one actually went a little higher. This went to the 61% retracement. Yeah, see, if you sell at the 382, your stops go, you've been stopped out. Well, you can't stop at the 618. You got to give it a little bear. So now we've had a big move down here. So watch silver, since the trend is something's changed. And as you can see, there's the ABCD right there. So we should get a pretty good rally on the silver, at least coming up to another, well, it almost made a 302 already. So I would do the big 382 off of this one right here. And that would take you up here about another 15-20 cents. That would be the one which would be equivalent to the 43 in the gold market. That's the way I would be looking at it. We'll just go trade gold, stick with that. But 29.43 would be the 382 off of the range today. But there was your ABCD, right there on the market. So we'll see what's going on. As far as the S&P, we've come down sharply here for some reason. It must be Stan being on the air. It's the only thing I can figure. Anyway, there was a number we were looking at 48. We got to 47.75, and we almost hit it again on the way back. We got all the way back to 45, and now we've broken hard. We've down 40 handles, telling us, uh-oh, something's really happened. So, and I'll show you the reason why in just a second. We stopped we went through the 382 like it didn't exist. It was some type of a news announcement, but so far this has held up. It's still looking relatively bullish. We got to get below this level. Remember, there's 2 hours and 15 minutes left to go in the day. But the reason for the break was over here with the Big Daddy Rabbit that we wanted to sell 500 points higher and didn't get filled. There's where we were waiting to get here at 50, up in this area right here. There was a 382. It went a little bit above it. And now you can see we've come down hard. We're taking out the lows of yesterday, believe it or not. Nobody ever thought that could be done, but we just did. And there's where the computers kicked in right there. So what you want to be watching, this has changed, folks. So this is pay attention, because you might not be able to get this on Monday. Let's do this together. There's your first 382. There's your ABCD. Now we're going to draw it in. Now remember, we have wide bars, don't we? Yes, we have wide bars. So we know one thing, that the expansion's got to be more than AB equals CD. It's got to be a minimum of 127. So if you put in 127, mark that. There's your low of the day right now. So here's your key. There's your low, and we're not very far away. All the Dow has to do now is rally 100 points, and it's going to take you right to the promised land. You'd like to see that come right on the close. That's what you'd love to see. Come up there, well, maybe come early and then break 400 points. That's not going to happen. But watch that. That's going to be really key. I'm putting this in because I'm going to be selling it right there, and we're going to see if it works or not. Remember, sometimes they work, sometimes they don't, but when they do, that's a bigger picture. We had the same thing happen here in the NASDAQ. You see it dropped almost 200 handles. Yeah, it did. Yeah, it dropped 200 handles, folks. That's $4,000 in a matter of, how many minutes did it take to do that? Let's do 13 minutes. It'd be about, okay, we went from so a couple hours. Yeah, it took 2 hours to come down. And all we're doing right now still looks pretty bullish, because we've stopped right at the 382, it looks like. And that's it right there. So here's another one. We start getting down below here. Pay attention. The main one is watch that Dow Jones one, folks, because that's got potential to be a really, really good sale at 49,930. If you believe this is the top, which in fact I do believe, but we'll, hey, remember, I was the fellow that said, boy, this market's really going to come down and be unglued here last Monday. If you remember last Friday, how bearish I was. There's where it closed on Friday. We gapped down. We were 160 handles lower, and this was in the middle of the night. By the time we opened on the 27th, which was about right in here, it was on its way up, and it never looked back. There was a 382 pullback the next day, Tuesday morning, and then boom, there's where we are. So we've had a 1, 2, 3, 5-day rally right here, stopping at a big ABCD. Indication maybe this is going to be topping. One that's really interesting, and I was bringing this to your attention when I was speaking with our good friend Stan. Here's the Russell, folks. Now this is the Russell index, okay? Now this is not a head and shoulders, because you can see the right shoulder so bigger. We stopped exactly at the 618 or 786. Remember, we stayed here for a few days. It looked like that was going to be it, and then boom, it took off. And then we had the big break yesterday. This big break yesterday was due to two stocks, Federal Express. These are the ones that delivers our package along with Amazon, and they use them too. So let's get the Federal EF. I got to remember. There it is, Federal Express. Several Express gapped down yesterday, opened a little higher, and is now lower again. But the one that really got hit yesterday was United Parcel Service, which I'm going to be visiting in just a little bit. It came in and really got creamed because of the fact that you can see it's still down, but not as low as it was yesterday. That was just a 15% drop. These are people delivering packages and stuff, folks. This is not. Why is there not more business? That's what I'm asking myself. That's what Richard Russell would ask when he was doing this thing. Well, this day went very quickly. Have a wonderful weekend, and I hope my sound was okay. And if it is, I'm probably not even going to repair any more, these earphones if I go through them too fast. So let's stay with us and see how much time we got left on the old clock on the wall, which I've lost. Oh, dear. Can't do much here. Can't do this right now here. Okay. Just a second. Mikey, I'm finishing my review.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, on a little short-term basis here, of course, you can see here, we just missed a 382 rally here in the S&P. This thing's weakening now, folks. We're down 50 handles from the high, and so that's a bad sign coming into Friday. But remember, we're still in an up move, and there's going to be buying probably coming at the close. Now, I mentioned over here this potential trade here with the Dow Jones. As you can see here now, if we go below this low, you have to recalculate what the 382 is. But right now, if you could get the Dow to rally to 100 points here, that's where I would be looking to be a short seller with your stop above the high of the day, because this is a possibility that this big ABCD missed it by how much? 150 points. So that's always possible. But we took the old highs out. That was 52.07. Where'd we get to? We got to 52.27. I mean, just really took it out by 20 points, which is really very, very little. And this is an outlier event. when you're seeing this type of a move, this many days up, that doesn't happen. It's usually up and down, up and down, up and down. When you see this is very unusual. So, well, that's what I'm looking at today. I hope that helps. Anyway, keep a very, very close eye on it. But we got 2 hours to go into trading, so it's going to be crazy. And crazy is what we live for. Hopefully, we're watching these patterns, and you'll be able to get into things that, give you a better chance to make a profit. As you can see here, the euro is still weakening. We were just talking about that right when Stan was on the air. We went right up to it, and here it is coming back down again. So looks like the euro on a longer term basis is getting ready to come down to right here, which is 103.20, down about another 70 pips. That's going to be a big ABCD on the daily. That means that dollar index is going to be taking out 107, but by how much? We don't know that. No one knows that. So watch it closely. So live every day in an attitude of gratitude, and may God bless. Live every day in an attitude of gratitude. God bless. And we'll see you on Monday.